Hello traders, investors, and crypto enthusiasts. Welcome to our channel, where we deliver deep dive analyses, hot news, and reliable projections about the blockchain universe, Web3, and digital money trends. Today, we're diving into a critical technical development in the XRP market. After months of consolidation, the token shows signs of a potential bullish breakout, supported by institutional inflows, whale accumulation, and key technical indicators aligning for a reversal. Let's explore the details: what's driving this momentum, the significance of resistance levels, and how investors can position themselves ahead of a possible surge to $1. XRP's resilience amid market recovery and geopolitical uncertainty. Despite lingering geopolitical tensions following Israel's strike on Iran in April 2020, for which sent oil prices surging 7% and triggered a temporary crypto sell-off, the XRP market has demonstrated surprising strength. The token began the week with a 9% rally, breaking above the 50-cent psychological level as Bitcoin and Ethereum stabilized after volatility. This movement aligns with broader market optimism, including hopes for a ceasefire in the Middle East and the potential approval of a spot Bitcoin ETF in the EU, which could inject liquidity into altcoins. The rally isn't just retail-driven. According to sentiment data, wallets holding 1 to 10 million XRP now own 9.9% of the total supply, up from 9.5% in early May. This institutional accumulation suggests smart money is positioning for a move higher, even as the broader market remains cautious. Meanwhile, CoinShares reports show $11.8 million flowed into XRP-linked financial products last week, reinforcing the narrative of growing institutional interest. However, challenges persist. XRP's price action remains below its 50-day and 100-day EMAs, and the open interest in futures has dropped from $5.52 billion in May to $3.83 billion, reflecting reduced speculative leverage. Yet, the stability in OI amid a bearish trend indicates traders aren't rushing to short the asset, leaving room for a surprise rally. Accumulation by whales. What it means for XRP's future. One of the most compelling signals for XRP's potential breakout is the whale activity tracked by sentiment. Over the past month, large wallets have increased their holdings by 0.4%, a significant shift in a market where 80% of the supply is concentrated in top holders. This accumulation occurs as microcap whales also show increased buying. With new addresses entering the market daily, the whale narrative gains weight when paired with on-chain transaction data. The number of active XRP addresses has risen 12% since May, while large transfers have spiked 25%, signaling movement of capital from exchanges to self-custody wallets. This pattern often precedes institutional accumulation, as seen in Ethereum's pre-TF rally in 2023. CoinShares inflows further validate this trend. The $11.8 million into XRP products in the last week dwarfs the $2.3 million in March, suggesting a strategic reallocation of capital. Notably, these inflows correlate with the SEC lawsuit resolution in July 2023, which clarified XRP's regulatory status in key markets. While the US case lingers, jurisdictions like Singapore and the UAE have embraced XRP, creating a dual-track adoption dynamic. For traders, this means two things. Whales are accumulating during corrections, implying confidence in a floor around 48 cents to 0.50. Institutional interest is resurging, particularly in regions with clearer regulations. Technical indicators align for a potential bull run. From a technical standpoint, XRP is at a pivotal juncture. The token has found support at 48 cents, coinciding with its 200-day EMA. This level has held firm since April, acting as a psychological and technical anchor. A break below would signal further weakness, but the relative strength index returning above 50 indicates buyers are regaining control. The MACD is another key signal. The blue MACD line is approaching the red signal line, and a bullish cross above it would confirm a shift in momentum. Historically, such crossovers have preceded rallies of 20 to 30% in XRP, as seen in December 2023 and February 2024. Additionally, the 50-day and 100-day EMAs are converging at 65 cents, creating a short-term support zone. If XRP closes above this level, it could trigger a wave of algorithmic buy-in from trend-following bots, accelerating the rally. However, the descending channel resistance at 70 cents remains a critical hurdle. A clean break above this level would invalidate the bearish pattern and open the door to 85 cents in Q3 2024. Volume analysis also supports this view. On June 12th, XRP saw a 30% spike in daily volume. With $2.1 billion traded in 24 hours, this surge came as BTC and ETH stabilized post-Israel, Iran tensions, suggesting a rotation into undervalued altcoins. Market dynamics: how XRP could outperform. XRP's recent rally is part of a broader sector rotation into undervalued assets. While BTC and ETH dominate headlines, altcoins like SOLX and RND have surged 400 to 800% in 2024, proving the market rewards projects with clear utility. XRP, with its RippleNet partnerships and rapid liquidity solutions, fits this mold. The token SLO volatility index of 32% also makes it attractive to risk-averse investors. Even during the April 2024 crash, XRP only dropped 12%, outperforming peers like Cardano and Dogecoin, which fell 18 to 22%. This resilience suggests a structural shift in demand. Moreover, on-chain metrics paint a bullish picture. The exchange net flow has turned negative, with $120 million more withdrawn than deposited in the past week. This off-ramp behavior often precedes rallies, as seen in Shibi's 200% run in Q1 2024. Meanwhile, Geopolitical's partnerships with MoneyGram SBI Holdings and Standard Chartered continue expanding, with rapid adoption in Brazil and India, reducing reliance on SWIFT for cross-border payments. Yet risks remain. The SEC's ongoing litigation in the US still clouds XRP's ETF prospects, unlike ETH and SOL, which have clearer regulatory paths. Additionally, a failure to break 70 cents could trap the token in a 50-cent 0.70 range for months. Testing patience, key resistance levels and targets. What's next? The immediate focus for traders is XRP's descending channel resistance at 70 cents, a barrier that has held since early 2024. A breakout here would confirm a bullish pattern, targeting 85 cents in the near term. This level aligns with Fibonacci retracement levels and historical selling zones. It's making it a high probability area for consolidation. Beyond 85 cents, the next major target is $1. Psychologically significant level last tested in August 2023. Reaching this would require sustained volume, above $2.5 billion daily, and positive news flow, such as SEC lawsuit resolution in the US, new RippleNet deals in Southeast Asia, where remittances account for 25% of GDP in countries like the Philippines. Bitcoin's ETF approval in the EU, which could drive capital into altcoins. However, failure to clear 70 cents could lead to a retest of 55 cents, where the 200-day EMA and Ichimoku cloud provide secondary support. A breakdown below 48 cents would invalidate the bullish thesis, potentially dragging XRP to 40 cents, a level not seen since late 2023. Traders should also monitor order book depth. As of June 14th, buy walls above 70 cents have grown 20%, with $150 million in bids clustered at this level. This suggests institutions are poised to enter if resistance breaks. XRP versus altcoin season. Can it lead the rally? The debate over whether XRP can lead the next altcoin season hinges on two factors: institutional adoption and technical momentum. While projects like RNDR and AKT have stolen the spotlight in 2024, XRP's $2.1 billion market cap and $200 million daily volume offer a balance of liquidity and upside potential. Historically, XRP thrives during all-season rallies. In 2023, it surged 120% as BTC approached $30,000, driven by institutional inflows and macroeconomic shifts. Today, similar conditions are emerging. BTC stabilizing at $60,000, reducing FUD. Inflation easing in the US, allowing the Fed to pause rate hikes. Geopolitical tensions de-escalating, with oil prices retracting from $118 BBL to $112 BBL. However, XRP faces stiff competition. Solana, Pepe, and World Mobile are all vying for attention. To stand out, XRP needs positive SEC court updates. A dismissal of the US case could trigger a 20% pump. Adoption in DeFi. Integration with platforms like Frax Finance or AV could boost utility. Stablecoin partnerships. If Ripple launches a fiat-backed stablecoin on its ledger, it could rival USDC and Tether. The key differentiator? XRP's real-world use cases, unlike many speculative altcoins. Its rapid solution already reduces liquidity costs by 70% for banks in Mexico and Vietnam. This fundamental strength could attract institutional buyers once macro conditions improve. Strategic considerations. How to trade XRP's potential breakout for investors. The current setup offers multiple entry points. Here are 3 strategies based on risk tolerance. Conservative strategy. Accumulate near support. By zone, 48 cents to 0.55, but stop loss at 45 cents. Take profit 1, 70 cents. Take profit 2, $1. This approach suits long-term investors who believe in Ripple's fundamentals and global remittance growth. Aggressive strategy, trade the breakout. Entry post-break of 70 cents, confirming the descending channel rejection. Take profit, 85 cents minus 1.00. Stop loss, 65 cents to protect against false breakouts. Use this if you're comfortable with short-term volatility and have a tight risk profile. Hedging strategy. Combine XRP with BTC ETH. Allocation: 50% BTC, 30% E, 20% XRP. Why? BTC and ETH provide downside protection, while XRP offers asymmetric upside. Risk management: rebalance quarterly to maintain exposure. Regardless of strategy, tools like Glassnode's, MVR, VZ, Score are flashing by at 0.8, indicating undervaluation. XRP's crossroads? Bullish breakout or extended consolidation? XRP's technical and fundamental landscape presents a classic risk-reward scenario, the confluence of whale accumulation. Institutional inflows and key indicator alignments suggests a breakout is plausible. However, the SEC shadow looms large, and a failure to clear 70 cents could prolong sideways action. The next 30 days will be critical. If XRP sustains above 70 cents, the path to $1 opens. But if bears defend this level, the token may retest 50 cents, forcing traders to reassess. What do you think? Is XRP poised for a comeback, or will regulatory risks keep it subdued? Share your views in the comments. Don't forget to subscribe for real-time updates and join our live streams, where we dive deep into charts, news, and blockchain trends. Remember, crypto investing requires research, discipline, and patience. XRP could be a promising bet, but always assess your risk profile before acting. Until next time, may the market treat your trades kindly.